Bitcoin just got absolutely destroyed down to 60k thousand dollars. The fear and greed index hit its lowest point in crypto history, and now institutions are buying billions of dollars. Today, I'm breaking down exactly why this is the setup we've been waiting for, and more importantly, what it means for your portfolio in the next few weeks. And if you're wondering why I'm calling this It's Finally Time, stick around because you're about to understand exactly why. Alright, let's start with a chart. Bitcoin came from all-time highs of around 130k just a couple months ago, and as you can see here, we've been in pretty brutal downtrend. We've got lower highs and lower lows. September high, October retest, November breakdown, December washout, and now we're sitting at $67,567. 200-day moving average is now trading way up here at around 100k. Price is trading significantly below it, which confirms we're in a downtrend. This is bearish price structure, no way around it. But here's the key thing, when we get this extreme of a move in such a short period of time, it creates an interesting setup. We go from euphoria at 130k to capitulation at 60k in literally 2 months. That's a 70k move in both directions. That's a violent market. Now, looking at the time frame, if you zoom out even further, you can see that Bitcoin has done this before. In 2017-2018, we went from all-time highs down to massive lows. In 2021 and 2022, same pattern. And every single time after that capitulation, we get a relief rally that can take Bitcoin 20 to 30% higher pretty quickly before deciding what to do next. So let's talk about the support levels. We've established a pretty clear support zone right here at around 67,500 US dollars. Bitcoin bounced off this level and it's now consolidating. Below that, we have 60k, which is where Bitcoin tested last week during that capitulation event. Now, if we look back at history, whenever Bitcoin has crashed this hard and this fast, it's almost always followed by a relief rally. Look at March 2020. Bitcoin crashed down, then immediately rallied 25%. Look at late 2018, crashed to lows, then bounced up 30-40%. Look at June 2022, crashed down, then bounced. Every single time after these capitulation events, we get a relief rally before price decides whether to continue lower or start the next bull run. We're potentially at that inflection point right now. Now let's look at the RSI indicator, which measures momentum. RSI above 70 means overbought, usually a pullback comes. RSI below 30 means oversold, usually a bounce comes. And look at where we are right now. We are at the same level RSI was during the March 2020 crash. We're at the same level RSI was at during the 2018 bear market bottom. This is extreme oversold territory. Now, RSI alone isn't enough to call a bottom, but combined with everything else we're seeing, and we are about to get into that, it paints a pretty clear picture that mean reversion is coming. Okay, here's the thing that literally nobody is talking about. The fear and greed index, which measures crypto market sentiment, just hit 8 out of 100. That's the lowest reading in the entire history of crypto. Think about that for a second. Lower than March 2020 during the COVID crash, lower than early 2018 when people thought Bitcoin was going to zero, lower than 2022 when FTX imploded and people thought crypto was dead forever. And here's the physiological reality. Extreme sentiment like this doesn't stay at these levels. When everyone is terrified, that's usually when the smart money starts buying, because fear creates selling pressure and that selling pressure creates opportunities. Sentiment resets happen all the time in markets, but they need a catalyst, and that catalyst is usually a relief rally that convinces people the bottom is in. We could be about to see that right now. And here's what makes this even more interesting. While retail investors are panicking and selling at these prices, what's Binance doing? They're buying. Binance just completed a $1 billion Bitcoin conversion for their SAFU emergency fund, their user protection fund. They bought 300 million of Bitcoin earlier in the week, and they just completed another 304 million purchase today. Their average cost basis is 67k per coin, basically exactly where Bitcoin is trading right now. Why does this matter? Because Binance is a multi-billion dollar institution. They have access to the best analysis, the best data, the smartest people in the space, and they're using this capitulation to buy, not to sell. to buy. This is institutional accumulation happening in real time. And historically, when institutions are buying hard during capitulation, it's because they are seeing value that the market doesn't recognize yet. They're not buying Bitcoin at 67K expecting it to go to 50. They're buying it because they think that risk reward is in their favor here. They think we're close to a bottom. Let's look at the on-chain data for a second. During this capitulation, long-term Bitcoin holders sold approximately 245,000 Bitcoin. That's a massive amount of supply that came to market. Why? Because a lot of long-term holders didn't believe we were in bear market until the breakdown happened. They held through the euphoria thinking we'd make a new all-time high. But once Bitcoin broke below that key level, they panic sold. This is classic capitulation behavior. When the long-term holders, the most sophisticated investors, finally give up and sell, that's usually the signal that we're near the bottom, because there's limited supply left to sell after that. We saw the same pattern in 2022. Long-term holders capitulated near the bottom, and then Bitcoin rallied 60% in the next 3 months. We're potentially seeing that dynamic play out again right now. I want to be crystal clear about something. This relief rally, if it happens, doesn't mean Bitcoin goes straight to 130k or 100k. Let me show you how I'm thinking about this. My base case is that we get a relief rally from here. Bitcoin bounces maybe to 75k, 80k, somewhere in that range. That could happen in the next 2 to 4 weeks. But there's also a scenario where we don't hold this support and we break down to 50k. In fact, if we look at the realized price, which is the average price every Bitcoin was bought at, sitting around 50k right now, Bitcoin has historically bottomed below realized price in every bear market, 2014, 18, 2022, so a 50k test would not surprise me. And then there's this scenario where we would just consolidate sideways here for a few weeks, frustrating everyone, and then eventually move higher. That's possible too. The point is, I'm not calling a bottom. I'm saying a relief rally is likely, but I'm also prepared for Bitcoin to test lower prices later in 2026. That's why I'm not going all in right now. So what I'm actually doing with this information, let me be transparent about my strategy right now. I've been accumulating Bitcoin in this 65-70k range. I'm taking some profits as we bounce if we get that relief rally. But I'm also keeping dry powder, meaning I'm saving cash for the possibility that we do test 50k later this year. I know it sounds crazy to want to buy at 50k when we could be at 75k in a few weeks, but that's the whole point of this framework. I'm not trying to time the perfect bottom, I'm trying to get a good average entry over time. This is how you remove emotion from investing. You have a plan and you execute it regardless of whether Bitcoin is going up or down. You're not trying to catch the exact bottom, you're trying to accumulate over time. Now let's zoom out to the macro picture, because this is really important. The US just released non-farm payrolls data. That's how many jobs were added to the economy, and it came in strong, way stronger than expected. 130k jobs were added in January versus only 55k that economists were forecasting. On top of that, the unemployment rate dropped to 4.3%, which is usually better than expected. This is normally something that would be bearish for Bitcoin, because strong jobs data means the Fed does need to cut rates, and fewer rate cuts means risk assets typically struggle. But here's the nuance. Strong jobs data also means lower recession risk. And right now, the market is pricing at the Fed is going to pause interest rates at 95% probability, meaning they're not cutting rates, but they're also done raising them. The Fed is sitting on the sidelines. So what does that mean? It means monetary policy is stabilizing. No more rate hikes, no aggressive cuts, just stability. And stability is actually what markets need when sentiment is this extreme. The uncertainty about Fed policy gets resolved, and that allows Bitcoin to bounce. Plus, the fact that the economy is strong enough to add jobs but weak enough that we see this much panic in crypto, that's actually a Goldilocks scenario. Not too hot, not too cold. Perfect conditions for a relief rally while the Fed stays patient. Here's another bullish indicator that a lot of people are missing. The Bitcoin spot ETFs have actually held up incredibly well during this capitulation. Most people would expect to see massive outflows when Bitcoin crashes, but that's not what we're seeing. ETF outflows have been relatively modest. That means there's significant buying happening underneath. Institutional money is flowing in even as price is falling. If institutions were panicking, we'd see huge ETF outflows, but we're not. We're seeing steady buying. That's a bullish sign. It tells us that the institutional narrative hasn't broken. Institutions still believe in Bitcoin, they're just loading up at cheaper prices. Alright, so let me recap everything we talked about. We have extreme sentiment, the lowest fear and greed reading in history. We have tactical capitulation, RSI at bear market bottom levels. We have institutional buying, Binance dropping $1 billion. We have the pattern repeating, every bear market has done this. And we have ETF flows staying positive, smart money is accumulating. Do all of this add up to a guarantee that Bitcoin is going higher? No, nothing is guaranteed, but they do add up to a setup where a relief rally is highly likely in the near term, and that relief rally could give us 10 to 20% bounce relatively quickly. So here's what I'm doing. I'm buying, I'm holding, I'm prepared for multiple outcomes. That's the framework. That's how you navigate this market without losing your mind. If you found this breakdown helpful, please subscribe. I post analysis like this 3 times a week, and let me know in the comments, are you buying this dip? Are you waiting? Are you taking profits on any relief rally? I'd love to hear what you're thinking. Thank you so much for watching, and I will talk to you next time.